Hey everybody, morning. Good morning, good morning, good morning. And welcome to the show. Looks like we have Rob, Don, Rex, Arturo, Mark, Dan, David, Diane, Darren, David again, Amy, John, and channel member Nikki. Good to have everybody and all my other subscribers. Click the button on the down here in the bottom. Be a subscriber on the channel if you want to chat while I'm live. If I'm no longer live, you'll have to leave a comment down below, and I'll do my best to get back to you. I sometimes I'm Johnny on the spot. Sometimes it takes me a day or so to respond to all the comments. And welcome to the show, Frank, Joseph, Ed, Rungamer, Ted. Thanks for coming, everybody. And before we get too deep into it, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. That means just because we predicted it or something happened in the past or we have high probability trades doesn't mean it'll work out in the future, including the super spicy bonus trade that's coming up at the end today. I'm kind of excited. I've been watching this trade cooking for weeks and weeks. We've talked about it a few times on here, and it's finally setting up a potential entry. I'll show you at the end. Stick around. And this presentation is intended to be informational, educational, fun, and entertaining, not a recommendation to be buying or selling any financial instrument at all. So no stocks, no options, no bonds, no forex, no futures, no cryptos, no treasuries. Don't long them, don't short them, don't trade them. All right? There's substantial risk of loss if you do that. And if you just need somebody to tell you what buttons to push, you need to hire and consult a financial advisor. That's not what I do. I'm not telling you what to do. I'm not telling you what to push. I'm not even telling you how to trade. And here we are today, right up here on Tuesday. Dun 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 dun. Retail sales. Retail sales. The core was light, came in 50% down from the expectation. And the main retail sales came in spicy right there. Dun 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 dun. That's a good number right there. And we're seeing some clear winners and losers when we look at the list today. So remember, this is Tuesday, right? Tuesday, I have a show at 5 p.m. called 30 Minutes of Awesome. It's the only show of the week where I do requests. So if you want to request tickers, come visit me at 5 p.m. today. I'll stick around and cover all the tickers. And let's try to make them good, all right? Zoom out. Look at your chart. If it looks like a choppy, hot mess of sideways, dumpster fire, I know you can't see it because it's green, but if it's a dumpster fire, come on. Let's try to find the good stuff, all right? I challenge you to bring good stuff tickers tonight at 5 p.m. All right. So we got that retail sales tomorrow, after after our show tonight, 2 p.m., we have this baby coming out right there, Fed funds. Expectation, what do we do? Probably a quarter point cut. It's all but baked in at this point. If they do anything except that, I think the market will be like, it'll have a knee-jerk reaction, basically. Just freak out. So I think they've pretty much convinced the market we're doing a quarter point cut. And like I said, anything other than that, it'll be a surprise. So foregone conclusion, I guess you could say, quarter point cut. But that could be it, as I've talked about already. That could be it. We could be staring down some problems here. We've got things are cooking in the market that we may not be able to take that rate any lower. I mean, the DGS2 already right there with us, already hanging out. Delta Gulf CR2, the 2-year constant maturity rate. If you're like, what the heck, JT, what is this? 2-year constant maturity rate, right there. You can go to TradingView.com. I know it's right behind me, but TradingView.com. Free account. You don't even have to pay. You can use this. Type in DGS2, Delta Golf Sierra 2. Pull it up. That gets you the blue line. Then you click this button right up here. Compare. Type in FED, FUNDS, Foxtrot Echo Delta, Foxtrot Uniform November Delta Sierra. Right there. Fed funds. Imagine that. The Fed funds rate's called Fed funds. Type that in, get you the orange line. Of course, it may be some other color, and you have to change it to orange. Settings are right here. Just change your color, and that gets you this setup right here. Now, case you maybe fall victim to believing mainstream media and you think that the Fed sets the rate, welcome to the truth. The Fed is always chasing the market rate. They overchased it higher. They were kind of holding. I think they expected another wave higher. Then we started drifting off. They're like, oh, sugar honey iced tea, we got to catch up. So they started cutting. But the problem here, this is rising. This potentially was a correction. 3-wave, 1, 2, 3, very proportional. And this can take off again. If they cut again, which they're likely to cut again tomorrow, they'll be right there. Right there. And then if the market runs off and leaves them, uh-oh. Problems, right? So, I know it's much more complicated than just an interest rate chart, but maybe it's not. Maybe it's not. Anyway, we have lots of things cooking in the market to create problems here. We've got acyclical inflation, a number that's not really widely reported, has been climbing for several months now, up almost 0.5 percentage point in the inflation in the CPI. That's a problem. What if it decides to get a little spicy? What if oil all of a sudden catches a bid and really puts the screws to the inflation? That's one of the biggest components because it trickles down through everything. There's some hazards sitting out here, and we'll see. They may hold it steady in January. We do have another FOMC meeting coming up right after the inauguration in January. This is the last one of this year. I mean, we got 2.5 weeks left this year. So putting the wraps on this, you're pretty quickly. I guess just 2 weeks left. That's crazy. This is, in case you didn't know, here we are. Next week, Christmas, and holy moly, there's 2025 right there, staring us down. We got 2 weeks left right there. Dun, 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 dun. If they don't do a 1/4 point rate cut, well, what happens? That's right. Might it be a rug pull? Might it be a, oh my gosh, why didn't they cut a 1/4 point? I think they've done well telegraphing that that's what they're going to do, and Jerome Powell's been pretty good at sticking to what he says he's going to do and telegraphing it and doing it, but trying not to create those OMG moments in the market. But jobs aren't looking too spicy. I mean, I pulled that up. I think I closed it. I pulled that up yesterday, I think it was, and the job openings. Look at what happens every time we have a giant decline in job openings. It doesn't necessarily start immediately, but this one's pulled back quite a bit without kicking off one of these gray zones. What are the gray zones? Recessions. Technically, think about it. I said there was a recession summer of 22. Right? I went on the record. It's on my YouTube channel, in fact, where I was like, it's coming. And then, look at that. We had 2 negative quarters of GDP, which was the official definition of a recession. And then the Biden administration is like, no, that we're not going to call that a recession anymore. That's an outdated metric for a recession. Well, this has continued down. And the only reason GDP has been remaining positive is due to government spending. And coming up in January, I'm like a broken record, but there's new people here. In January, what happens? Trump takes office. The Department of Government Efficiency spins up, starts their mission to cut government spending in an aggressive way. What happens to GDP? And this isn't going to be just rip the Band-Aid. It's going to be like cut a limb off right here. So there's some headwinds coming in here. Definite headwinds. Just be careful out there, right? Keep tuning, stay subscribed. Hit the button, be a subscriber, hit the notifications. Set an alert on your phone. I go live every morning, 9:15. Set an alert on your phone. Every morning, 9:15, I'm here going through the risks, the potential goods, the potential bads. Keep coming back. You don't have to watch every day, but check in a couple times a week. See what's going on. See what's sizzling in the market. See where we're at with this whole thing. All right, Tesla, look at this baby. Look at this baby. Up another 12 bucks in the pre-markets. Can we break on out? 600 going to be the wall? This is a big winner right here. Retail sales just keeps rocking and rolling. We'll talk about that more in a minute. All right, S&P hitting our head here, just grinding it out, consolidating right there onto that 1272, that 1618 right up there. Now the risk, a pullback. The upside, an expansion right up there. I don't think we're going higher than 63.11 at this point. Could be wrong. I've been wrong before. Played somebody that was wrong on YouTube one day. Anyway, this also could be in the cards. What if they don't do the quarter point cut? That would be the first line of defense right there. If we break through that, could be substantially further down, maybe to the daily roadmap line down here. Daily roadmap line. If you're new here, don't know what the devil that orange is, that's the roadmap line. Links in the description. Or you can click on the channel homepage over here, pinned to the channel. I kind of tell you how it works, what it is, give you the code. You know, there is a link in the description though for $5. You can just get the easy button and add it to your chart and get a weekly watch list every week. So that's available. But I try to give you maximum value for free. So this could develop into something bigger if we break through this zone right here. Definitely a zone to watch right there. About 59.50. And there's another level in here we'll talk about more. But that's the levels to watch. So yesterday, we had the contract rollover. So this has got a gap. And what does ES usually do on a gap? We fill it. We fill it pretty quickly. Sometimes it lasts for a month or so, but usually we fill it pretty quickly. So this gap right here is not suddenly the market's up 9 gazillion points. No. This is the contract rollover from the December contract to the March contract right there. We're going from ESZ 2024 right there to ESM. I think it's M. No. H. ESH. 2025 right there. That's the new contract, and that's why we had the gap up in the futures. If you look at it, the ES1 exclamation point, it's a constant contract, automatically rolls forward. So the volume on this one has been ramping up as the volume on the ESZ 2024 is rolling down. These are futures contracts. They work, if you're familiar with options, they kind of work the same way where they have a premium attached to them. And as they come to their expiration, they bleed that premium off. But they don't go to zero. They go to the market price of the S&P. So they start with a, they are futures. So it's a price in the future is what you're pricing out. Similar to options. But there's just one contract. So you're either long or short it, and that's kind of the way it works. Now we look at the ES1, and we look down here. The market kind of expects S&P to go up over the next couple years, 3 years, right there, 4 years. That's pretty good, but it's not huge numbers. We're just talking about 6,000, and right up here, maybe 7,000. Now, I commonly hold that I think we're going below 4 before we go above 7, but I could be wrong. All right. Now, why would Powell cut and set the new administration up for success? I mean, we could red team it all day. Like, why would they cut a quarter point? Why? Might they cause chaos in the market right in front of Trump taking office? It's possible. It's all possible. Everything's possible. All right. They've done really well telegraphing they're going to do a quarter point cut. Powell keeps stressing that he doesn't like to freak the markets out. He likes to keep everything pretty chill. We'll see if that holds, or if the committee wins out and they decide to do something different. We'll see. We'll see. So this is likely to fill this gap right here at some point. Even though we have the contract rollover, it's likely to fill that gap. We just don't typically hold gaps, big gaps. It's a relatively big gap there. We went from 76 up to 150. That was a pretty big gap. We don't typically keep that gap in the futures on the constant contract. We just don't. That's just why? We just don't. All right. Psychological or whatever, we just don't typically do it. And now it could take a month or two or possibly even 3 before we come down here, but we're eventually coming down and filling that gap in that futures contract. Same on NQ. Kind of skews my charts for a little bit here with that giant pop, because now we're up there, but price didn't really move like that. It's because of the gap. So NQ, H 2025, not 4. This is what we've been cooking with here. And I need to turn the algorithm off. 15-minute, just been grinding higher. We had this move here. And we're coming up here. Now, the liquidity on this, why do I use the constant contract? Because the liquidity on this was pretty sketchy back here before it started being a more popular contract, as it becomes the active front month contract, what they call the front month. And so it makes it difficult to chart past performance here to indicate future prices. So this pullback, though, kind of on the played outside for NQH. We could be topping out. That's the red flag here. All right, Russell. Let's check this baby out. Still pushing down. Still being soft. Still under the 4-hour roadmap line and support at the daily roadmap line right here. That's where I all but to me, it's almost a foregone conclusion we're going down to that line. So for the rare action, I have a debit spread. I bought a put right up in this zone, and I sold a put down at the bottom down here. And if price actually does that, you know, it's like a 5-to-1 risk to reward. The reward's like 5 times bigger than the risk. If it decides to go shooting off, I lose that risk. Welcome to the game. There are losses, substantial risks of loss involved in all trading. CL, look at that. Couldn't maintain. We just keep testing. We keep testing it. Like, couldn't maintain the breakdown, couldn't maintain the break up, and we're right back in the middle where I kind of figured we'd be. Just can't do it. Can't get out of here. Can't get it out of its own way. Now, if it does get spicy and break out, well, things are going to get a little wild. Things are going to get a little wild. At this point, we've kind of got this going. Need to expand this range here. Eventually, these will come together somewhere out here. So this could maintain this wedge on out here. I kind of thought we'd maintain that through the inauguration, maybe. We'll see. It's kind of my target for the inauguration. I think we're just going to hold the zone here. More of this right into the inauguration. Frustrating for anybody trying to be long or short oil. It's a good time for iron condors until it isn't. You know, if this does suddenly break out, war or whatever breaking out, you know, a hot war, not just, you know, people shooting BB guns across the lines at each other. I'm being facetious. We actually go full on war. This could go up. Of course, it could be volatile and do a breakdown and then a breakup. So be careful Even if you want to try to iron condor oil, be careful. USO might be the way to do it if you're trying to do it. Just something that's out there right now. Gold. That's right down. Fully back testing this breakout. Like we're at this make or break period right here. We did this big pop out. It looked pretty spicy, and then we promptly rejected right there in gold. Holding the lows, holding the downtrend. If we can break back higher, that initial indication, breaking through that 2720 area, this can take us on up here, about 2,900. But, flip side, if we break down below this area right here, going here at the minimum, 2520, possibly as low as 2,400 down here. I mean, we could extend it even to 2,350 if things got really extreme on gold. But that would be the primary expectation right there. And probably slightly lower than that low we had right back there just in a couple weeks ago. Right there, flipping between, right at the beginning of November-ish when we pulled back pretty steeply in gold. So we've got that low right there. Well, if we go down, if we break down through here, we're highly likely to go lower than that low at the minimum. At the minimum right there. Highly likely. So break down here. That's kind of the target, that low. Right like that. All right. Moving on, Bitcoin. Go, baby, go. Things get really interesting once we get up into the 115 to 120,000 area on Bitcoin. Now, I don't know if you heard, but there are reportedly $5 billion worth of shorts tied up at 100,000. And that's kind of between the futures market and the options market and various other things, various other ways to short Bitcoin, about 100,000. Now, we've seen some of these reactions here as we push through, adding shorts. As we got into that zone, adding shorts. They were defending that $100,000 breakout pretty severely. Funny thing is, though, if it gets away from you, how much percentage upside down are you willing to take before you need to force close yourself on your short? 15%? 20%? 25%? Well, 15 to 20% puts us in that 115 to 120,000 zone. I think a prudent trader might call a spade when you're down 20%. Remember, it's not being wrong that costs you money. It's staying wrong that costs you the big money. If you were to double down here, that's where you really get in trouble when it continues to push on higher. Right? Think about it. How far can they let this run? And this would be a self-fulfilling thing, right? Called a short squeeze. When those people stop out, they create buying. There's already shortages in the market. I mean, Michael Saylor last night, bought $1.5 billion worth of Bitcoin. Made another $1.5 billion buy. That's pretty wild. That's for MicroStrategy, MSTR. ETH still lagging, still hasn't broken the highs we had just a couple weeks ago, and still hasn't broken above that March high. God, this thing just grinding and lagging. Has opportunity to catch up, but it's just not doing it. Be careful with how much you have risked right here. It does not have to catch up. And, somebody yesterday was like, well, if you listen to YouTubers, they commonly say, money flows to Bitcoin first, and then it starts flowing into Ethereum and altcoins. And we kind of lined that up yesterday during my Termar Trading Lab meeting. And guess what? They all peak at the same time. Like there's no lag to it. So it's not rotation out of one to the next to the next. They kind of all are riding in the same boat on the same river. And if somebody's behind, they may be behind at the end when we get to the waterfall. So be careful. Dollar still churning, burning. Respecting the resistance so far. Right there. If we break back below about, I think it's about a 106.40, probably indicating we're coming back to that daily roadmap line right there. Somewhere around 104.80. And then we'll see what the next turn is. If we can get below that, maybe, possibly, we're going down to the mid-90s like I've been talking about for freaking years. But there's always the possibility we bounce again and keep grinding it. The market has this funny habit of frustrating the most number of traders they possibly can at the same time. And they, being all of us subconsciously, we just like to frustrate ourselves. So, in case you haven't seen the zoomed out chart, I highly expect a downside move to somewhere in the mid-90s and possibly the low 90s. Been expecting that for years, literal years, and it's going to do it. But I'm not trading for it at this point. NKD, global liquidity, just grinding near the highs. And that's curious, where we have global liquidity high. But when you look at these over here, epically low participation on the S5TW, even though things were looking okay yesterday in the market. We didn't really do a giant pullback. This thing still grinding down to the bottom. If we get down to that 20 level, that's already like a major caution reversal higher, maybe cooking in the market. That can propel everything up. 10 is like, it's probably going to happen really quickly. Next couple days, if we get down to 10 or lower, that's 10% of the S&P 500 companies above their 20-day moving average. Look at that. Right, yesterday we were at 25. 25%, yet we're making almost all-time highs, and we're just right there underneath. It's kind of wild. The participation rate just really low. And again, right here, stocks above their 50-day. This dropped below 50, down to 42 yesterday for S&P 500 stocks. That's lower than it's been since back here in July. Wow. This could go to the bottom. If it goes down to 20, definitely got a reversal potential cooking in the market. And the weird thing is we're sitting at all-time highs. We're sitting at the high while we're doing this big pullback in this chart. It's really weird. It's really weird. All right, something's wrong. Something's not right. There's a glitch in the matrix. And we dipped below that line here yesterday. Stocks above their 200-day. We're down to 61% of the S&P 500 stocks above their 200-day. All these combining together to indicate something's up. Something's up. Something's up. Now, this one doesn't just move fast. We've moved down pretty steeply, pretty quickly. We were up here at the beginning of December. Now we're down here. Just 2 weeks later. It's a pretty sharp drop-off. When we do sharp drop-offs, we tend to make sharp pullback, sharp go the other way. Now, this could develop further, come all the way to the bottom. It's entirely possible. Just watch out, though. All right, something's going on, like something weird. We're getting some concentration in the markets. Now, 2021, we saw that bleeding off. Like right here. I just want to zoom in and talk about this really quickly. We saw this bleeding off right here. November into December. Then we saw a little rally in the beginning of the year. And that was the high in 2022. What about the fifth day? It was down, down, down in the market all the way through October. When we bottomed out right here. Made the double bottom thing. So things looking eerily similar to this price action right here. Or this participation action right here. we could see a swift recovery and then drop out. Just be careful out there. Dun, 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 dun. All right, what's moving? What's cooking today? ASML. I go to the pre-market, pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list, and we come and look for opportunities. Looks like this one is going to come up and retest the roadmap line from below, then probably turn down. I still think going toward the bottom of the box. I got a feeling. I'm not trading for it. Not putting my money where my mouth is, but got this feeling that we're going to respect that and turn down one more time. And if we don't hold that, we could go down much bigger. So cautious getting too long on that one. Tesla, look at this baby go. Look at her go. 500 coming up not far away now. Sheesh. $25. We'll be there. Absolute insanity. How fast. Gosh, I've been talking about 500 for, again, years. 500 was my target for years. I mean, look at that. We're through some of these extensions here, and we put it in log mode. There's 500 and there's 600. 500 right there, 512, and there's 613. If we get to 613 before earnings, this is the big caution here. Like, not often wrong on these. We get to there. That earnings date right there. That's right after the inauguration. We get to there, and we're right up here. Absolutely insane to think of that move. That's like a 20+% move on higher from where we are now. We're probably doing at least that kind of correction, if not something a little deeper and more sinister. I'd probably come back to at least 480 area, if not on down to like 400. Maybe like, nah, I can't do that. Yeah, I can do that. Be careful. Look at these moves over here. Look at these pullbacks. Just warning you, like, set your alerts. Set your alerts. What's Tesla's PE? Does it matter at this point? Right there we got, the last PE I got was for Q3, 71. I think P to S matters more than PE. And it still has way room to go on PNS. Price to sales over 20 is usually where things get crazy. Yeah, let's do the 600. I'm with you. Hey, Sledge, I got 2,500 TSLO. My money is where my mouth is on this one. Like, I basically made both my parents a Tesla's car's worth the money playing TSLL for them in their retirement accounts. And that's just since November. I was buying, if anybody bought with me down here, we were talking about $8 here, and then 9 here, and then 11 was the last place I added. Things are spicy. Look at that baby go. Now, realistic targets here, if you're riding with me, 50. Pretty good place to consider getting off, right? That's 5x on the shares. Maybe even more than that if you got in at 8. I've been accumulating and accumulating, so I've not added anything since 11. And people are like, should I get in now? You're late to this party. Let's be honest, all right? It's kind of like Bitcoin. Should I get in now? You're kind of late to this party. We could be looking down the end of the party very soon. All right, Bitcoin, 150, 170, probably top out there. That's a pretty good upside. But Tesla, cooking at 500 and 20% upside. That's pretty good, but it's not like we're sitting in at 180 anymore either. All right, when we were talking about it, when I was talking about buying down here, I tried to buy even lower. I kept moving my order down. I have my chunk sitting at like 175. That's where I bought in my chunk, and then I switched to TSLL and started buying that instead of buying the main stock. Bang for the buck. And this was the last real big opportunity right there, where I was like getting ready to go. And I guess that one right there when we back tested the breakout. Very similar to what I was talking about on a couple of those other stocks right there. Back testing the breakout. Lead to giant upside, like gold. Remember gold? Doing this move right here. Look. This is the power of if it does and holds something like this. Gold doing that exact move. If we can go higher, explosive potential upside. Now, gold's little correction is small. This one was a years long. That took it. You know, we had to back test it twice before we got this explosive move up. So gold's explosive move isn't going to be nearly as explosive as Tesla's here. All in perspective. PRTG. Dumpster fire. Absolute dumpster fire. Stay the fudge away from that. You know, it's biotech. 1, biotech. 2, reverse split. 3. Why? What makes you say no? Unless they, hey, we just figured out how to cure every cancer there is, and it works every time, 100%. To the moon. Otherwise, probably going down. MSTR, riding with Bitcoin, but still in that consolidation, the warning zone. Warning zone. Warning zone. If we break out, we're going up. If we break down, it's all over but the crying. If you've never seen this before, where did my chart go? Right there. Look at this. Look how similar this looks. See that right there? See this right here? Oh, be careful. Just need to cool off for the next rally, right? MSTR can go higher. Be careful. Could be done. Could have the thrill and the euphoria. Could be done. We could be in complacency mode. And it can break down. Now, the other thing is we could be, maybe we don't have, maybe no, not everybody's in the boat yet. All right. Maybe we haven't sucked enough people in and we still are over here somewhere. Still over here. Possibly. Maybe. But maybe we're over here. Hard to know. Be careful. This looks really similar. I'm still long MSTR. I still think we could pop. I may stay long all the way through that and that. I don't know. Haven't decided yet. Here's the support zone right there from those prior tops and that breakout zone. Could come all the way down there and test it. And that could last a while. Like this could, you know, could last well into 2026. SMLR doing the same thing MSTR is. Same money printing strategy. If you have no idea what that is, you should go listen to some of Michael Saylor's videos on what the heck he's doing. Selling bonds, taking that money, buying Bitcoin with a 20% per year return on Bitcoin, covering the spread. It's a pretty good deal. They're convertible bonds. This right here, above that 618, could pop chart-wise. Could see a rally. QMCO. I'm guessing this is a quantum chip manufacturer, quantum research, whatever. Reverse split, dumpster fire, nasty stuff. Be careful. Everybody's like, quantum computers are going to be great for AI. AI is not the application. The big existential threat, I guess you might say, is cracking Satoshi's wallet and taking the $1 trillion worth of Bitcoin that's hanging out there. That's the big threat for quantum computing. And somebody's like, well, that was like 20 years away, 10 to 20 years away. Well, in case you haven't been paying attention, Google over the weekend announced a new chip that kind of pushed that timeline up to maybe 5 years away to be able to crack Satoshi's wallet with the kind of power. So be careful. Coinbase still grinding here. If we can get that breakout in a big way on Bitcoin, I think the shorts are going to evaporate, and this will set probably a new all-time high. Right up there around 430 and possibly as high as 500. Right up in there. Tiva. Look at that, baby. Let's remove this stuff. Got that high right there. This is a pharmaceutical company. Not my favorite thing to trade, but already hit the target. Look at that bounce right there. That high, that low. And we're already at the target. Possibly as high as 21, but this could be played out, so be careful chasing that one down. BTCL, 2x leverage on Bitcoin. Rock and roll, baby. Net, this is Cloudflare. Big picture, we have upside targets, probably 135, 164, if we can get the extension. Did this big bounce back here. Took a while grinding. Now we're finally coming up for the breakouts. First target. And it could retrace before we get up to the second target. Right there. TSLR. 2x leverage on Tesla. Similar but different than TSLL. And at this point, how do you figure out the targets on these? You just take, what do you expect? 20% more upside on Tesla? Right? Maybe. So you take your tool like this, you go, well, here's the current price. If I expect 20% more, 2x, maybe 40%. Let's be a little more conservative. Let's say 35%. So $20 more. Potential. If Tesla rallies on up. Now it could outperform. This could outperform. It's 2x, 2x is the target. And they may pay a big dividend to bring themselves back down to a 2x target. So holding shares is the way to go on leverage. On these leverage instruments, if you use playing options on these, you got to be careful. It's like playing with nitroglycerin right there. Be careful. I know options are available. Options on leverage. Leverage on leverage. That's where you get in trouble. That's another giant dumpster fire. I wouldn't touch it with your money. QBT. Another quantum player. These are really rallying on that Google news, but look what happens in the past over here. Get some excitement and then continue to be a dumpster fire. So we're still years away from this being a practical technology. And practical is all relative. Like if you're into the business of breaking encrypted stuff, quantum computing is your jam. If you're into the business of just about anything else normal people use computers for, maybe not gonna have widespread applications for what you do. TSLT, 2x rocking and rolling. Another 2x potential. I like TSLL. Why? You got to pick a horse, right? I picked TSLL. There's TSLT, T-Rex. The one up here, TSLR, run by Granite Shares. TSLL, run by Direction. I tend to have better luck with these Direction funds. That's just my experience. Doesn't always work that way, but there you go. ARQQ, another quantum player. MSTX, that's a 2x leverage on MSTR. You want to play with fire? This is my fire of choice. Defiance Daily. MSTX is the one I own some shares of. It's lower price than the alternative one. I forget the other. I forget what the other one is. MSTU. There it is. That's a T-Rex. I haven't had great luck with T-Rex ones. Now this one has been higher priced, and this did split 10 for 1 just recently. So it brought it back down to reality here. It was 150. So be careful chasing the price here. While Think about it. If MSTR goes from 400 to 1,000, what is that? That's like 100 something percent. So this could go from 16 to like 30, maybe 35. Not bad. But it did reverse splits, so it's dulled down a little bit from what it was. KVYO. Yeah, I got nothing to say on that one. That's a nasty sideways chart without a long history. Just barely above the top and may invite a retrace. BitX, 2x leverage on Bitcoin. This is another one of my weapons of choice. And I'm gunning for 100 on this. It's kind of what I'd love to see 120. I bought pretty big back here. Several hundred shares. Maybe closer to 1,000 shares. And we're sitting and waiting. Sitting and waiting. Targets. You can play here, but we're starting to get into targets, so be very careful. 83 could be it. 100 could be it. We'll have more opportunities later, but these are starting to be played out. I'm excited because I'm making, like, my year is turning out to be really dang good on the back of all these that I've been talking about for months and months and months and months and months. I mean, I talk about it a lot, and people are like, it's not happening. And then when it starts moving, everybody's like, oh, is it too late? And it's like, yeah, kind of. I mean, you had opportunities all over here. Why are you shopping now up here? You got to be on top of this stuff. You got to be buying when it looks horrible. That's really hard to do psychologically wise, but you can put a reasonable risk on something down here. All of a sudden, it turns into big money up here. That's the way I play. What's the opportunity right now today? There's not one. Well, we'll talk about a one that's looking pretty good here at the end. I've got this bonus trade that I've been watching for weeks. Looking pretty good. We'll kind of dissect it a little bit here in a minute. FNGU, we'll watch for that to come back down. We're played out at this point. There's leverage. Watch out for that. PTIR. This is leverage on PLTR. PLTR. Look at this baby. So 75, well, I said 75 was the target for a long time right there. And it needs a retrace. It hadn't really done one since back here and back over here. Think about that. That's pretty big right there. That's potential 40% downside. You take that and multiply that on leverage, put that on PTIR with a 2x leverage, that's 80% downside. Possibly a 40-ish percent upside also to the next fib line up. Possibly. So that's an 80% upside versus 80% downside. Sounds like the risk to reward is not great on PTIR right at the moment. But I'll leave that up to you. If you want to keep playing that one, go for it. Fire at will, but it could have a pretty devastating downside coming back to 25 from 125. Right there. Be careful. App probably got some downside cooking. GEV probably got some downside cooking. We're kind of stalled out at that 1618 and retrace would be in order. NVDU, uh-oh. Get below the roadmap line. This can very quickly develop into much bigger downside. TMDX already is developing into much bigger downside. We're at a support zone. If we don't hold it, we might go lower low. That lower low would be right down in here. So if we break down through there, we do have a gap sitting there that won't really be support probably, but watch out. AVGO, that is rock and rolled higher and probably going to retrace. Like that was a ridiculous pop and probably going to retrace in the coming weeks and months. NVDA coming down to the daily roadmap line. If we get below it, uh-oh. Watch out for the bigger retrace. It very quickly can get down to this level. I saw somebody saying there's giant support at 100 for NVIDIA. I'm not so sure. I think that support might be on further down here. Affirm. I am short NVIDIA with some 2027 120 strike puts. And they're getting pretty spicy already. Let's wait till we get to 75. All right. Affirm probably needs a retrace. Just a minor blip so far. MVDL, another 2x leverage, getting below the roadmap line. This is all the warning signs here. All the warning signs are showing up. Watch out. Watch out, watch out, watch out. Snow. That's got an interesting little head and shoulders forming right there. Watch out for that one to retrace. Back to the roadmap line. Wouldn't surprise me one bit. This is where I'll probably be a bigger position buyer. I bought one share back here because I said when it hits 100, I'm buying a share or whatever it was, 100. When it made the lower low, that's what I said. When it made the lower low. So I bought one share right there. That's where I bought it. And I just sat waiting right here. I thought we were going to make a even lower low, but we didn't. Still possible we'd break down and do that. We kind of rejected off that gap zone right there where we gap down. Gap downs tend to be resistance. Gap ups don't tend to be support. So there is a gap zone right there. We're going to probably need a retrace before we can come test it more deeply. I'm interested. They have interesting technology. Their chart has looked pretty horrible. But now that we made this lower low, we've kind of cleaned it up. As far as potential to go higher, interesting technology, especially for data centers and really leveraging the power that's sitting in there in the data centers and getting, more efficiency out of it. You buy a lot of computing power for that peak computing power, but then it sits idle a lot of the time when you don't have peak demand. These guys have a way to start exploiting that idle power and get more bang for the buck out of the data center. So it's interesting technology. SPXL, I'm really simplifying all the details there. SPXL sitting here in between. Now, this is a leveraged product and may not hit the fib levels. I mean, it's just kind of the way it works. We did get the awesome trade that went from here. When we fired off the entry, got the retrace, but boom, right up there to the target, right there. And we pulled it back again and we've extended, and that could be it. A lot of times we see it stall out before we get to that level and come back down to the roadmap line. It's possible. All right, now it's possible we can consolidate here and pop it again and pop it there. That's possible. So anything's possible. High probability wise, until we get back to the roadmap line, there's nothing for me. In UE, whew, look at that one. That's why you got to be careful when they start breaking down. Broke down that uptrend of lows, broke down below it, back tested it. How low could she go? This one, kind of scary how low she could go. We could be looking at something down here around 50. Cut in half again. Twilio. Resistance is up here and support at the roadmap line. So I would venture to say that we probably need to retest before we can get the energy to come up here. Doesn't have to happen, but that would be the thing I would wait for me, and I am kind of waiting for. I've made a bunch of money at Twilio in the past, and I'd love to make some more, but just doesn't have the setup for me at the moment. And PLTR, we already talked about. 75 is major resistance and support all the way down here, back at the breakout level. Would not surprise me one bit to retrace and retest the breakout before we go higher again. VRT, again, retraced to the roadmap line would be in order. VST, Again, retrace to the roadmap line would be in order. It's getting to be up higher here. Up here higher, excuse me. Monster talking back to me a little bit. And ultra semiconductors. Flashing warning signs for me right here. So this fund, you know, if you're going to invest in one of these funds, you should go at least read the more about this fund and see what the fudge they trade, right? By investing in this thing right here, Ultra, it's a leverage product. Ultra means leverage. You'll be grabbing 34% exposure to NVIDIA, which already looks like it might be rolling. You get some 20% exposure to some T-bills and 12% to Broadcom, which made a giant pop, but might retrace. So be careful out there. And you get some 9% into US dollars, which are inflationary. And AMD, which has a downward trend there. All right, the bonus trade, as you can see, MU is the bonus. Dun, 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 dun. Now, why is it the bonus, right? JT, why is it the bonus? Because of this setup right here. We'll talk about more the cool things, but here's the new potential entry. The target for this daily setup using the market roadmap system is 117.02 with a stop below 94. It's an upside potential of $8. This thing wins 91% of the time on 35 trades. So this is a statistical population here. This thing, usually when it sets up, it produces a win. Since 1984. So this is not new. Like, this has been around quite a while. And the profit factor is over 2. It's not as high as some of the stuff like TQQQ that had a ridiculous high in the past. But I've been waiting for this trade to break out and set up this potential trade right here. Now, the resistance is among these highs over here. Still not broken out. But we did set up this potential trade right here. We did. And zoom it out. We did the measured bounce here. That move up, this retrace, hold that 618, measured bounce. I said we need to break up through here above this roadmap line pretty firmly. This presents a potential entry for a much larger potential move. Possibly as high as 300. Possibly. That's going to be much longer term. What options would you buy for that? Not sure. 2027 at the minimum. If you're going to go for something like this. You know, that's already out there, basically 2027. So could it go faster than that? It could. It could do this. Possible. It could do this. Could do something like that. It'd be like 2030. You never know exactly the path, all right? We're still very early in this potential breakout too. And that 115 is the short-term target. And we're talking about 40 trading days on average. Could last 80 trading days, could last 120 trading days. Those are trading days, not calendar days. You may be like, well, that's just out 40 days. That's the end of next month. No, 40 days is a little longer than that. A little longer than that. We've got to use this tool right here. From here, pull it over 40 bars. I'll zoom it up so we can see it. Make sure we get it on the candle there too. Right there, 40 days. Pull it over. That is actually, boom, 59 days. That's 2 months. And we're out well into February there. Why is that? Candles don't make on the weekends and don't make on holidays. So there you go. There you go. That's the potential. Now, it could easily take 2 times longer than that. So 80 trading days. Could be well out here, 120. Look at that. 4 months. Could easily take 4 months to pop up just to the target. Just that 117. All right. Super spicy. I like it. I like the bigger, longer term potential. Shares would be a reasonable way. All right. You let me know if you take it, if you like it, if you do it. Let me know. Remember, 5 p.m. request show, 5 p.m. coming up today, 5 p.m. Eastern. I'll be live, take you all your requests for at least 30 minutes. Lately, it's usually 2 hours. We'll be here. I'll try to hit all the tickers or until I got to go do something else. So, all right, everybody, be safe out there. Be careful. When I say be safe, remember, nobody cares about your money more than you do. So if you're not trading with a plan and being careful with your money, you can lose it all. Substantial risk of loss involved in all trading. Be careful out there. We'll see you later on this afternoon, this evening.